Crypto investors are currently trying to determine the timing of the next bull run for Bitcoin, following a volatile 2022. During a crypto conference in St. Moritz, Switzerland last week, some news channels interviewed industry experts who described 2023 as a year of caution for the crypto market. According to these insiders, Bitcoin is predicted to fluctuate within a range and be affected by external factors such as interest rate increases. Additionally, volatility is expected to persist. A significant increase in value, known as a bull run, is not expected to occur in 2023. However, despite the cautious outlook for 2023, experts are optimistic about the future prospects of the crypto market, looking forward to the next year and beyond. In 2022, the cryptocurrency market as a whole experienced a loss of approximately $1.4 trillion in value. This decline was caused by a combination of factors, including liquidity problems, bankruptcies, and the collapse of the prominent exchange FTX. The negative impact was felt across the industry as the issue spread, known as contagion. Although Bitcoin has seen a slight increase in value at the beginning of the year, in line with other risk assets such as stocks, experts predict that it is unlikely to reach its previous all-time high of just under $69,000. However, some experts believe that Bitcoin may have reached its lowest point and will no longer decrease in value. I believe there's a possibility for a small further decrease, but I don't think it will be substantial, Bill Tai, a seasoned venture capitalist and crypto industry veteran, said in an interview last week. Meltem Demirors, the chief strategy officer at CoinShares, believes that Bitcoin is likely to be in a range-bound trading pattern, with prices fluctuating between $15,000 and $20,000 on the lower end, and between $25,000 to $30,000 on the upper end. Demirors also stated that a lot of the forced selling that occurred in 2022 due to market collapses has now subsided, but there is not much new money entering the market for Bitcoin. I don't think there's a lot of forced selling remaining, which is optimistic, Demirors said in an interview. But again, I think the upside is quite limited, because we also don't see a lot of new inflows coming in. Investors are also monitoring the broader macroeconomic climate. Bitcoin has been found to have a strong correlation with risk assets, such as stocks, particularly the technology-heavy Nasdaq. These assets are impacted by changes in interest rates set by the Federal Reserve and other macroeconomic factors. In the previous year, the Federal Reserve pursued a vigorous interest rate hike strategy in an attempt to curb inflation, which had a negative impact on risk assets, including Bitcoin. Industry experts noted that a shift in the macroeconomic environment could benefit Bitcoin. There could be triggers that we're not aware of yet. For example, the macroeconomic and political situations are quite uncertain, Demirors said. Inflation remaining at high levels is a new development, something we haven't seen in the last 30 or 40 years. It could provide a catalyst for the market. So who knows, as people look to make allocations going into the new year, where crypto will fit into that portfolio, he added. Timing of the next Bitcoin bull run. Several industry participants have discussed historical patterns in the Bitcoin market, which tend to occur roughly every 4 years. According to this pattern, Bitcoin reaches an all-time high, followed by a significant correction. This is usually followed by a year of poor performance, followed by a year of mild recovery. This cycle is also influenced by the halving event, which occurs every 4 years. During this event, the rewards for miners who use specialized machines to validate transactions on the Bitcoin network are cut in half. Miners receive Bitcoin as a reward for their validation efforts. The halving reduces the supply of Bitcoin entering the market, and this is expected to continue until there are only 21 million Bitcoin in circulation. Historically, halving events have preceded a bull run in the Bitcoin market. The next halving is scheduled to take place in 2024. Anthony Scaramucci, a prominent financier, has referred to 2023 as a recovery year for Bitcoin and has forecasted that the cryptocurrency could trade between $50,000 and $100,000 within 2 to 3 years. He further said that, "You are taking on risk, but you're also believing in Bitcoin adoption. So if we get the adoption right, and I believe we will, this could easily be a $50,000 to $100,000 asset over the next 2 to 3 years." Bill Tai, on the other hand, estimates that the start of the next bull run is likely a year away. He believes that the market might still feel the impact of the FTX collapse for another 6 to 9 months. Jean-Baptiste Graftio, the global CEO of cryptocurrency exchange Bitstamp, stated in an interview last week that he expects the next bull run to happen within the next 2 years, as he sees a growing interest from institutional investors